All right, Helaine, good morning. Good morning. Looks like we just got the room opened up here for today's edition of Trade of the Day Live. So super excited to be sitting down here live with you, unpacking everything that's going on.
Same here. I'm
Definitely
happy
is,
to be here.
definitely is, the markets, given everything that's going on, what you may read in the headlines, market
hmm
is pretty cool, calm, and collected. It's just been, kind of blocking out all the noise, which, frankly, kind of love to see, right? I'm going to go ahead and pull up our first chart here so we can start diving in. But we mentioned kind of at the onset of this week that there was the possibility of a looming government shutdown, and it could
hmm
potentially have some effects on the market. Even though historically it has kind of been somewhat of a nothing burger for markets out there. They've typically looked, right past this and continued to kind of do their own thing. And that's actually what's happened this time. Even though we are going to have some pretty significant market data get delayed, tomorrow we were we were scheduled rather to get the updated jobs report for September. Today we're supposed to get the weekly initial jobless claims. All those things are kind of on hold. They're all delayed, because again, Congress isn't meeting today. They're off on a holiday, so we're at least going to be extended through tomorrow. So we're getting a delay in that data, but so far market's looking through it, and it's not proving to be a huge issue. So that's I think actually it's kind of turned oddly into a bit of a good thing, which I can explain here in a moment. But Helene, any thoughts you have about that?
Yeah, I have to say I was surprised. I mean, I think there's a lot of anticipation going into the shutdown and a lot of fear around it, that's for sure. But maybe it was just baked in at that point that everyone was like, we're gonna shut down. The market baked it in, and today, as you said, everyone's pretty cool about it.
Yeah, exactly right. Yeah, I mean, you can see just in today's trading, I can zoom in here, tighten the frame up here in just a second, but you see the S&P 500. Sorry, this is actually an ETF version, so I'll pull up the actual index here, but it's tracking the S&P 500. So you can see right here, the index S&P leaped out to a new all-time high at the open, rallied
Mhm.
just a touch, and it's come in just a bit since then. It's pulled back. But it's still, we rallied up, made it another new all-time high in today's trading, at least intraday. We're not on close as of yet for a new closing all-time high. But again, the markets are really kind of looking through all this short-term noise. And Helene, again, like I was saying, even though the federal government labor market data, which we would get from the BLS, the monthly non-farm payrolls report, the initial jobs claims, the weekly report. Those things are delayed, but you're kind of having to turn to other sources of data. Typically, not too much attention gets paid, to the ADP employment report. We did get that on Wednesday. Of course, that's coming from the private sector. That's a private company that's putting that out. ADP. We
hmm
all probably know them fairly well.
Oh yeah.
And that report, not only did they revise their previous month's number down to actually show a loss in private sector employment, but this month's the most recent report that they just put out showing that last month there was actually a pretty significant contraction in employment. So that would be two
Dang.
consecutive months of the ADP private sector employment actually showing net declines in the job market. So, you're seeing that, see really weak ADP, you're seeing just a delay in, the jobs report from the federal government. So, it's kind of a question mark as to what that may show. But the reason why I think that this may actually be somewhat of a bullish setup for the markets is that, again, this market is highly focused on rate cuts. It was glad to get that first one out of the way, but it wants more. It's no secret. Everybody, the market is craving rate cuts and wants to see these rates come down from the Fed. And I think that's exactly what this week is going to deliver. You're seeing a pretty significant softening in the private sector employment ADP. Again, having the kind of just question mark looming out there for what the non-farm payrolls report. With the Fed meeting later on this month, that's going to put a pretty significant, hole in their data. So, if they don't have that data by then, I would think the shutdown will probably be over. But, again, you're continuing to see that softening, at least in the ADP number. So that's going to lend some more, evidence, more credibility towards a more dovish Fed at the upcoming meeting. You can see that right here in the CME Fed Watch tool, Helene. You can see this is looking for the upcoming meeting later this month on October
Yes.
29th. You can see markets starting to price in a near 100% probability of another rate cut coming
Mhm.
up then. And then there's also fairly similar odds for the meeting in December to close out the year. So, starting to see more and more evidence pile up for a continued dovish Fed that's more focused on trying to address some weakness in the labor market. But again, I think that's kind of a dovish setup for rates and a bullish setup for markets because, again, seeing these rates come down, you can see the effect on the 10-year U.S. Treasury. That's what we're looking at right here. Obviously, this is a very significant proxy for stock prices, Helaine. We know this, when you're seeing a big rally in the 10-year U.S. Treasury yield, it's typically putting downward pressure on stock prices. But seeing this, the trend's very clear right here. We did get an initial little pop in the 10-year yield right after the Fed cut, but you can see, it quickly found some resistance, made a new lower high, and is continuing that trend downward. On the back of the recent weak labor market data.
Blane, real quick, we had a question in the chat from FW. What is the percent probability of Fed rate cut above 25%?
Okay, yep. So that's a great question. So just looking at this, again, this data that the CME FedWatch tool is based on, that's what this graph is based on, is just the Fed funds futures trading out there. So that's how they get these probabilities. And so you can see our current target range showing right here. So it's the 400 to 425. So that's the current range for the Fed funds rate. And so you can see that the market is pricing in a 25% basis point cut, a probability of almost 99% right there. There's only 1.1% in the current Fed funds futures market showing that they're actually going to hold. At the upcoming meeting, it's not showing any probability of
Above 20,
greater
25.
than a 25 basis point cut. So, it's the market's really saying that they're fully anticipating a 25 basis point cut at the meeting later on this month. Yep. But
Thanks.
yeah, I think, Helaine, this is probably one of the most important charts in the market right here is this 10-year U.S. Treasury yield. As I said, we had a bit of a pop. It kind of spooked investors a little bit right after that first Fed rate cut. But you can see that was pretty short-lived. It made a very definitive, lower high on that chart right there. It's now starting to trend back down. And if, we continue to see this trend downward, again, largely because of the weak labor market data, that's really what's putting the downward pressure on the long-term yields here. I fully anticipate that to be, at least over the short to medium term, a nice tailwind for stock prices.
Totally agree.
Absolutely. So, but yeah, I just wanted to point that out that, despite, all the headlines and, kind of fear mongering around the government shutdown this week and, delayed data, things like that, that I think it's actually possibly setting up to be kind of a bullish occurrence because it's going to, it's just, like I said, it's building more evidence in the camp for a more dovish Fed at the upcoming meeting, continuing to bring rates down. But Helaine, anything else you want to point out in the charts or go back to the index chart or anything like that before we hop into our trade ideas for today?
No, I think we're all set to hop into today's trades.
Perfect. Yep. Well, I'll go ahead and take it away. Obviously really great trend in the S&P 500 still, seeing it break out to a new all-time high this morning, really, really encouraging trading. It is back below the upper channel. So that was good to see because we quickly found ourselves back in that overbought territory. But to go ahead and pivot and hop into my trade idea for today is, Helaine, a couple weeks ago, we laid out, kind of our playbook for the next 3, 6, or even 12 months, in the market. And one of the major themes was, continued, strong performance from the technology sector, particularly those that have been really strong leaders this year, whether it's the mega cap tech or, cybersecurity. There's, definitely pockets within tech that have just been really, really strong outperformers, really everything connected to the AI trade. We are fully anticipating those to continue to see some nice price action.
Especially ones as you that took a break in the last couple of months. There was a pause for some of those bigger names, a consolidation, and now we're seeing the resumption of that bull trend again. And we really, when we're laying out the next couple of months, we said we think that these are going to reaccelerate after taking that break, and that's what we're seeing.
Exactly right. Yep. And so, that's a perfect example of what we're looking at right here. So this, of course, is a chart of CrowdStrike, ticker is CRWD. This is one of the preeminent players in the cybersecurity space, one of our favorite stocks to trade here, in the cybersecurity space as well. And again, you can see the stock, it's, had really strong performance this year. It just had just a heck of a trend. It was just on a tear higher, through the back half of spring or first part of summer right there. And then, come, roughly the first week or so in July, it hit a little bit of, a tailwind. You found some resistance and traded down pretty sharply. So you can see there was some de-risking in the stock. It came down, found some support, just right around where its prior all-time high had been. So it found some support there, and then now started to rally again. You can see a very, very new technical buy signal that's been generated on our chart right here. So looking at our trend lines right here, if you look at our red line right here, that's our 21-day EMA, and our green line down here, that's the 63-day EMA that I also like to track. You can see where the latest crossover was. You see we had a very brief short sell signal where the 21 was below the 63, but you can see the stock has recently, again, it's rallied very sharply off of that level of support right there, started to regain some serious momentum, and you can see that brand new bullish crossover that happened really just a couple weeks ago right here. So this is a very, very new buy signal that's just broken out on the charts, and it looks like CrowdStrike is now, gaining some momentum, gaining some steam, and is looked poised to go ahead and challenge those recent all-time highs that were set back in early July. And so again, you can see it's starting to make a shorter term series of higher highs and higher lows. It's got the technical trend line buy signal on the chart there. It was actually at the open today trading above the upper Keltner channel, but it has come in just a little bit. It's just below that upper channel now. So that's confirming that CrowdStrike at current prices is, it's not outside of that buy zone that we like to target. So it's, in a great set, a great price range rather, offering a really attractive entry point for a bullish trade on CrowdStrike. So, there has been a little bit of volatility in the stock recently, Helaine. So the way I'm actually looking to play this one is with an in-the-money call option debit spread. Again, I think
I
CrowdStrike,
like it.
certainly has, all signs are pointing towards this one continuing to accelerate higher, continue to see that nice price appreciation in the shares.
Hmm.
But, again, there has been some volatility, and I would like to have a little bit of downside protection in case this one, continues to have a little bit of that chop, while things are still shaking out, getting that new trend underway. Plus, it's nearly a $500 stock. So,
Yeah,
if you're just looking
that
to
too.
buy, an in the money option for a directional option purchase trade, you'd be shelling out, a pretty penny to get some exposure to this bullish trend. But,
Hmm.
all those are great reasons why I would look to a call option debit spread in this case. So I'm specifically looking at the November 21st options here, and I'm looking at to buy to open the 440 strike call and sell to open the 450 strike call. So you can see it's a 10-point spread using those two right there. And it's, got a bit wider of a bid and ask spread. It looks like it just widened out just a touch. So I'm actually just going to enter one contract of the spread. It looks like just the bid kind of fell out just a little bit right there. So we're probably not going to get filled all the way down at 690. That would be my bet. So I'm going to go ahead and set this up, somewhere around 750. I think that's closer to where the
Fair.
market actually is on this one. It's below that threshold of 8 points for a 10-point spread that we'd look to get filled at. So I'm actually going to bump that up to, let's see, somewhere around here maybe. Well, I'm going to go ahead and put it at 770 and see if I can get filled there. If not, I'll go ahead and look to adjust my order here in a moment. But, it's still within our, parameters of what we look at for, entering a spread like this. But yeah,
And
Helaine, that was my trade I found for today.
I love it. And I just wanted to say this is a normal part of debit spreads. We often, we find a spread, it looks great, and sometimes the liquidity, it just kind of swings, especially if there's a tremendous amount of volume or whatever it may be. But sometimes you have to adjust your entry price and your limit order. And that's something that we do. And we have these upper thresholds of what we ideally don't want to pay above. As Blane is saying, ideally no more than eight. That would be great because then we can lock in a 25% profit potential. But this is just part of a debit spread entry. This happens from time to time.
Yep, exactly right.
But I love the trade. I totally agree. CrowdStrike has been an outperformer for some time. They really corrected pretty strong. That in that was it July to August timeframe. But
Hmm.
they're the type of stock that once they start trending, you tend to want to jump in on them because they're going to keep trending for a bit. So, definitely love the signs there. Love that trend and that reacceleration of that bull trend.
Yeah, no, so you see a stock like CrowdStrike make that sharp of a move,
Yeah.
after a bit of a correction and pullback. That's something to pay attention to. This is one of the market's favorite stocks seemingly. It's when it's moving, it's really, really getting traded. You can see just evidenced by some of the spikes in volume down here. You can see how much the stock, how much volume flows through this when it's trending. So, seeing that, reversal in the trend there, brand new buy signal breakout on the chart, was really, really encouraging and was something that I wanted to start trading myself.
Absolutely. And FW said, why not a credit bull put spread? Now, FW definitely could trade credit bull put spreads. They have the same risk reward as an in the money call option debit spread, the way that we trade them. So, of course, you'd be credited that full profit potential at the time of the entry instead of debited that cost that we get debited. So it's really up to personal preference. Our team right now trades call option debit spreads, although I will say that we have been working behind the scenes on new bull put credit spread product or service or idea. So definitely keep an eye out for that in the future. But for the time being, we trade in the money call option debit spreads.
Yep, exactly. Yep, it's just something that we have just kind of leaned towards those over the years. But again, like we
Hmm.
said, they have pretty much the same risk to reward profile. The
Exactly.
only time that one would really outweigh the other is if there's the time value essentially in the options between the calls and the puts is off balance for some reason. So typically you look at those and the calls and the puts time value of the same strikes is going to be roughly the same. But if for some reason one's kind of significantly higher time value than the other, then that would be a good opportunity to go ahead and consider one over the other. But uh, that's just a short explanation there.
Awesome. Okay, let me go ahead. I'm going to jump into my trade and then we'll keep answering some of these questions. And if anyone else has a question, please put it into the chat. We love getting to answer your questions, guys. So I'm going to go ahead and I'm going to pull up my trade. Give me a second here. And
Yeah,
this is a little
absolutely.
bit different. As you know, up until this point, we've really only looked at debit spreads and directional calls or puts. I can't remember if we've got over a put yet. But today I'm looking at a different strategy, and it's a bullish butterfly spread, a call butterfly spread, a bull call butterfly spread. It's a mouthful. But if you're not familiar with this strategy, it has four options and three different strikes. And what you're doing with this bull call butterfly spread is you're looking for stocks that are in a consolidation pattern. And what you're doing is you're buying options about a week out, is what our team does. And you are saying, I don't think the stock is going to exit this range. And so you have an upper range, upper boundary and a lower boundary. And as long as the stock stays within that range, you're set to profit at option expiration. Oftentimes, you can profit actually much further ahead of option expiration. That's actually what our team does. But let me go ahead and I'm going to show you the trade first, and then I'm going to tell you how I'm going to manage it after. So I'm looking at Las Vegas Sands, symbol LVS, and I'm going to zoom in on the last 3 months just to give you guys a better idea of what I'm looking at here. Typically, we're looking at the last 3 months and we're looking for stocks that are pretty range bound. And so, as you can see over the past month, LVS has been in a fairly tight range and consolidation pattern. And we can see clearly that it has this upper threshold limit that it's hitting resistance right around 55 and a half, and it has a lower at 51 and a half. So it's trading within this range and just taking a breather on a previous bullish trend. Now, as you know, these consolidation patterns, they can continue for a while. And so what I am doing is I am looking to enter the October 10th butterfly spread, and I'm going to use sorry, the 49 straight call to buy to open, the 59 straight call to buy to open, and then I'm going to sell two of the 54 straight calls. Now, the cost of the spread currently is 279. And let's go ahead and scroll down here and we can see that at option expiration, if LVS were to be trading exactly at 54, then I could make $220. So closing in on 100% return there, guys. But we can see my break even range, so my upper and lower limits. So as long as LVS stays within these limits, I can profit. So that lower range is 51.76. So looking at the chart, 51.76, it's all the way down here, really close to that mid-September low. And then that upper limit is going to be at 56.24. And 56.24 is right up here near that upper counter channel. So as long as LVS stays within that range, I can profit between now and option expiration. And so once I enter this trade, what I'm going to do is I'm going to check on it over the next couple of days. And as long as the stock is within that range, if I start profiting and I make a quick 20% return, I'll just go ahead and I'll exit the trade. I'll take my money and walk away. I could hold it all the way till next Friday if volatility stays low, and I think it's going to stay within that range. But typically, what our team is doing is we are entering these on a Thursday. We're looking to exit them Monday, Tuesday, sometimes Wednesday, just depending on that stock movement. But ideally, looking for a quick 20% return, roughly, and then getting out of there. So I'm going to go ahead. I'm going to enter my trade, 277, 278 now. And I'll go ahead and round it up to 280 because, or let's do a couple cents higher just to make sure I get filled. 282, couple cents above that current midpoint. And there, I got filled at 282 for that trade. And so that is my trade of the day. As I said, I know it's a little bit different, but I hope everyone likes seeing that little different trade, a nice consolidation pattern, slightly bullish, but still consolidating within that set range.
Yeah, no, Helaine, that's great. It's always nice to mix it up with the different trade ideas. Kind of show folks something a little bit different. It's certainly a strategy that we've implemented, quite a bit over the last really year and a half, and have really liked it. We found a lot of success with it, and that looks like a great setup right there. Exactly the type of stock we look to target on that. One's consolidating, pretty tightly range bound. And yeah, looks like a great way to trade that one there with Las Vegas Sands. So great looking trade there too.
Appreciate it, Blane. And it looks like somebody's asking for me to put that trade in the chat. I'm going to go ahead and do that right now. So
You might
LV,
want to clarify the ratio of those contracts too, since it's a little bit different.
yes, you're right. I can do that. Blane, do you want to jump into other questions while I'm doing that?
Let's see. Oh yeah, sure thing. Yeah, see, Jim had asked, do we ever consider any seasonality factors when considering trade? So, it's a good question, Jim. It's one thing, we typically will be mindful of it, but again, taking just this year, for example, there's the typical seasonality once you start, you finish up April's trading and get into May and, people start saying, oh, sell in May and go away. Apparently the markets can't do well after, May and into June. If you would have followed that advice this year, you would have missed out on one of the better bull runs that we've seen in quite a number of years.
Oh, yeah.
And so, again, too, we got into heading into August and September. And again, historically, those 2 months have been two of the lower performing months on, pretty much on all the indexes. But again, it doesn't mean that it's always going to work out that way every single year. So we typically don't factor seasonality in really all that much when we're making trade decisions. Again, we'll be mindful of it. And then, if it starts to play out and kind of become one of those self-fulfilling prophecies and people see a sell-off in September and say, oh, here comes the big one, and everybody starts selling everything. Well, it's going to clearly show up on the charts, and that's how we're going to react to it. It's because we're looking at the charts, we're looking at the technicals. That's what's powering our trading decisions. And so if we see the price action start to not behave how we want it, it's going against us in a trade or something like that, that's what's going to make us make those trading decisions. Not so much maybe the, historical seasonality. But again, we're cognizant of it. We pay attention to it, but it's not really the primary factor that's driving our trading decisions.
Exactly. And if you were on our live sessions earlier, like in August, you've probably heard me say a number of times, I'm a little nervous. It's August. We're entering this seasonally rough period, but everything technically is saying that we're bullish. And so, you probably heard Blane and I say that a number of times, like everything's bullish, everything's maintaining bullish. technically speaking, we
Yep.
are aware of the seasonal risks. And of course, I get a little nervous just going into that time of the year, but we are technical traders. We rely on the technicals to make those decisions. And so that's exactly what we did. And that's exactly what we will continue to do.
Yep, exactly right. So it looks like that might be all of our questions there, Helene. I don't see any other
Yeah.
ones that we hadn't answered quite yet. So thanks again, guys, for all the questions. Again, love getting to have the engagement and
Yes.
have chat back and forth with you and get to answer some of these questions. So I really appreciate those. But again, that looks like all the questions there, Helene. So I think we can probably go ahead and wrap up today's session. Again, interesting week on the market here, guys. We're again breaking out to new all-time highs yet again today on the S&P 500. So, still seeing some very, very encouraging trading. We'll be back here next week on Tuesday, breaking it all down. There certainly could be some developments between now and then. But overall, really bullish outlook for the markets. I think there's a lot of things still, falling in favor of stocks, broadly speaking. And so that's how we're still positioned here. And so we're looking forward to getting back here next week with you all to talk about it. But until then, hope you all have a fantastic rest of your week and great weekend. And Helaine, thanks so much. Great session again here today.
Thanks, Blaine. Everyone else have a great weekend. We'll see you here on Tuesday.
Yep. Take care, everybody.